Are you tired of the daily grind? Do you dream of escaping the 9 to 5 and living life on your own terms? Financial independence, F.I., could be your ticket to that freedom. But achieving F.I. doesn't happen overnight. It requires a carefully crafted portfolio, your very own freedom machine that works for you, even while you sleep. In this video, we'll break down the key steps to build a portfolio specifically designed to propel you towards financial independence. Buckle up and get ready to build your path to freedom. Number 1, define your dreams. Before diving into investments, take a step back and ask yourself, what does financial independence look like for you? Is it sipping margaritas on a beach somewhere, traveling the world, picking up a creative passion project? Quantify those dreams. Estimate how much you'd need to live comfortably, factoring in potential future expenses like healthcare. This number becomes your F.I. target. Don't worry, your F.I. target will likely evolve over time. The important thing is to have a guiding light. Now let's calculate your magic number, the amount your portfolio needs to reach to generate enough income to cover your expenses. This usually involves a formula that considers your F.I. target, desired withdrawal rate, typically 3–4%, and life expectancy. Many online tools can help you with this. Number 2, understand your investment options. Building a strong portfolio requires diversification. Here's a breakdown of some key investment tools. Stocks represent ownership in a company. They offer long-term growth potential but come with higher risk. Bonds are loans you make to governments or companies. They offer a stable income and lower risk, but generally slower growth. Real estate involves owning property. It can provide regular rental income and potential value appreciation, but requires upfront investment and management. There are also options like index funds, ETFs, and alternative investments. Number 3, asset allocation and risk management. Now it's time to craft your portfolio's asset allocation. This determines the percentage of your investments allocated to each asset class. Typically, younger investors have a higher tolerance for risk and can allocate more towards stocks, while those closer to F.I. might tilt their portfolio towards bonds for stability. Remember, diversification is key. It helps spread your risk and protects your portfolio from market fluctuations. Don't let market volatility turn your hair gray. For example, asset allocation is like deciding how to fill your backpack for a hike. You wouldn't just bring water bottles, you'd pack snacks for energy, a rain jacket for unexpected weather, and maybe even a first aid kit for safety. Similarly, in your portfolio, you allocate your investments across different asset classes like stocks, bonds, and real estate. This diversification helps manage risk. Stocks offer high growth potential, but can be volatile, like unpredictable mountain weather. Bonds provide stability like a rain jacket, but with slower growth. By strategically mixing these assets in your portfolio, you create a balanced and weatherproof plan for your financial journey. Number 4, invest regularly. Automate it. Consistency is king when it comes to building wealth for financial independence. The magic of compound interest works best when you make regular contributions to your portfolio, allowing your money to grow exponentially over time. But relying on sheer willpower to remember to invest every month can be tricky. Here's where automation becomes your best friend. Set up automatic transfers from your checking account directly to your investment platform. This way, you'll be paying yourself first without having to think twice. Even starting with a small fixed amount can make a big difference in the long run. Imagine it as a tiny snowball rolling downhill, gathering momentum and size with each automatic contribution. By automating your investments, you eliminate the temptation to spend that money and ensure your path towards financial independence stays on track. Remember, it's all about building a habit of consistent saving and letting compound interest work its wonders for your future self. Number 5, rebalance and reassess. Life happens. Your goals and risk tolerance may evolve. Regularly review your portfolio quarterly or annually and rebalance if needed. This may involve selling some assets that have grown significantly and reinvesting that money into other asset classes to maintain your desired allocation. Keeping your portfolio in tip-top shape is crucial for a successful journey towards financial independence. Imagine your portfolio as a well-diversified recipe, with each asset class playing a specific role. Stocks might provide the spice of high growth potential, while bonds offer the stability of a base ingredient. But like any recipe, proportions can get thrown off over time. Certain asset classes might outperform others, causing your portfolio to tilt away from your original risk tolerance. Here's where rebalancing comes in. It's a periodic checkup, typically done annually, where you assess your portfolio's allocation. If, for example, your stock holdings have grown significantly compared to bonds, rebalancing might involve selling a portion of those stocks and reinvesting the proceeds back into bonds. This strategic trimming and reinvesting bring your portfolio allocation back to your target percentages, ensuring you stay on track with your risk tolerance and long-term FI goals. Remember, rebalancing helps you avoid being overly exposed to any one asset class, safeguarding your portfolio from unexpected market fluctuations. It's a proactive approach that keeps your financial recipe on track for success. Number 6, knowledge is power. Building your portfolio for financial independence is like navigating a complex landscape. Just like any good adventurer, knowledge is your compass and map. Educate yourself through reputable financial resources, books, podcasts, and online courses from trusted sources. Be wary of get-rich-quick schemes. True wealth building takes time and understanding. Financial literacy empowers you to analyze information critically, make informed investment decisions, and adapt your strategy as your goals and circumstances evolve. The more you learn about asset allocation, market trends, and risk management, the more confident you'll become in navigating the path to financial freedom. Remember, knowledge is power, and in this case, the power to unlock the life you truly desire. Number 7, embrace the journey. Financial independence is a long game, not a quick win. Instead of solely fixating on the end destination, embrace the journey itself. View it as an empowering adventure where you're actively taking control of your financial future. Celebrate every milestone, whether it's reaching a savings goal, learning a new investment strategy, or simply developing a more mindful relationship with money. These moments, big or small, represent progress towards your dreams. The journey itself becomes a form of liberation, breaking free from the shackles of financial worry and allowing you to focus on what truly matters, building a life you love. Remember, the skills and knowledge you acquire along the way will benefit you far beyond achieving FI. So, buckle up, enjoy the ride, and learn from every twist and turn on the path to financial freedom. Number 8, seek professional guidance. Building your portfolio for FI can be incredibly rewarding. However, it's not a one-size-fits-all approach. If you feel overwhelmed or have complex financial situations, consider seeking guidance from a qualified financial advisor. They can help personalize your investment strategy and ensure you're on the right track. But remember, the final call is yours. Educate yourself enough to understand the advice you're receiving. Number 9, act. Ready to get started? Don't wait for the perfect time. Act today. Open that investment account, set up your automatic deposits, and start building your freedom machine. Every small step counts towards your financial independence. You've got this. Building a portfolio for FI empowers you to design your dream life. Remember, it's about more than just money. It's about freedom, flexibility, and living life on your terms. Subscribe for more financial literacy tips. Thanks for joining us. We'll see you on the path to financial independence.